What are the interest rates? Shall we buy the house today? Am I going to get a good deal? Is it a good time to buy the house today? Uh, there are so many mortgage officers and lenders nationwide. What are the good characteristics that a home buyer should look in the mortgage officer or a mortgage company? These are some of the many questions that we will be going over with our on this episode. Hello, I'm Nasir Qureshi, Realtor Daddy in Houston, Texas. I bring you again, once on request and on demand, another hot episode of related topic in the real estate industry. We have a special guest today, all the way from Dallas, Texas, Mr. Vinny. Hi, Vinny. How are you?
I'm good, Nasir. Thanks for having me.
You're welcome, and thank you for being with us. So, could you tell us a little bit about yourself, who you are, which company are you with, what do you do, please?
Yeah, absolutely. So I am a lifelong mortgage professional. When I had gotten out of the military in 1999, I had moved to Texas and had the opportunity to take over Washington Mutual Finance office and learn about Texas equity when they were still using typewriters for the documents instead of printers. Not to date myself and sound old, but that's when I got started in the business and moved on throughout my career um, to work for different banks, World Savings, US Bank, um, on their portfolio um, side of things where they were doing unique loans that focused on unique properties, jumbo, and all types of different loan programs. So, I've got a lot of experience and a passion for the mortgage industry. And really, it's important to me um, that we're able to help our buyers and help change their lives by making good decisions. And so that always has been something that's really important about what we do. And so now I am partnered and work with First Community Mortgage. We are a bank, and so we lend nationwide and have a large product menu to accommodate construction, investors, your first time home buyers. And, you know, really, we try to be a resource for our home buyers and consumers out there and try to do, with great communication and a lot of options for them to get the best deal as they move forward.
Fantastic. You mentioned that you served in military. What branch, sir?
Oh, Army.
Okay. Thank you for your
Yeah,
service and thank you for your
yeah.
sacrifice. God bless you, sir. And
Uh,
and God bless United States of America. Thank you. We respect and
Changed my
salute you.
life. It
Thank you.
changed my life.
Fantastic. Without your service and all military, we will not be here as America where we are today. Thank you. And great mortgage industry. I say to my clients, and I say it publicly, no loan, no home. It's very, very, very important. So, a little bit of message to the people and a little bit of message to other real estate agents because our audience is generally public and also it's a real estate focus show. Um, I will the common questions that I get as a real estate agent about the mortgage. I will also ask you those questions so you can share some, put some light on. So,
Sure.
what is a pre-qualification, and could you let the other real estate agents and the so-called buyers know when to get it and the importance of it?
Oh, absolutely, and that's a great question because there's two terms that float around out there that you'll hear: pre-qual, pre-approval, and what happens in a lot of those scenarios is it's talked about like it's a precursor to the approval. And so what happens is a borrower will call a lender, and that lender will ask them their basic information about their employment, about how much money they have set aside for down payment, their assets for reserves, and they'll take and over the phone fill that information in and give them that pre-approval that allows them to go out and look at some of these houses that they might be interested in, and understand that they are in some fashion qualified to make an offer on that home. And that's where I have issue with those terms, because what happens is when we take the information over the phone during that traditional pre-approval process, those clients can then go out there and spend money on an inspection, which can be about $500. They could spend money on an appraisal, which is about $600. So there's $1,100 that they of their hard-earned money that they've spent without a 100% certain approval. And so when a lot of the lenders out there take liberty with this and try to get the people into their system by offering these quick pre-approvals, where what we try to do is we want the buyer to enjoy the process and in throughout each step of it know what's coming. So the first thing that we do is we do an upfront approval. And then what that does for us, it gives us the opportunity to embrace any risk that might be associated with the loan. Maybe they have a credit score that needs a little work, or maybe they don't have quite the funds they need to close. We're able to give them guidance and put them on a plan that will work for them and give them certainty before they go out there shopping. And so what we do is we get the appraisal done. I'm sorry, we get the underwriting done, we collect all their documents up front before we issue any letter for them to go shopping. And what that enables us to do is give them certainty when they're going out shopping, so that when they're emotionally tied to that dream home that they've fallen in love with, that it's not going to be pulled out from under them because someone didn't check their pay stubs. We are going to go through everything and do that forensic audit on those docs to make sure that once they start that process, that they are going to be able to finish it and end up in the home that they had selected and that they had fallen in love with. So it also gives us the opportunity to call the listing agent and endorse that offer and let them know, hey, we're working with someone who's already been approved and can close as fast as you need us to in order to accept our offer. So I really like going the full service on the approval and doing the approval up front, and so that then that way all of our buyers are able to really not be stressed out about, am I approved, is something going to change. It gives them the ability to really enjoy the process and look forward to the memories that they're going to create in that home, instead of the heartbreak of possibly it not being approved or something going wrong with it that wasn't checked up front. So, when we talk about pre-approval and those pre-qualification letters, there is a difference in quality, and it does matter. I
And
hope that I
yeah,
hope that
it does. Yeah, great answer. And what do you recommend to accomplish this step from mortgage broker at the
yeah,
beginning of the journey of buying the house or when?
absolutely. Knowledge is power. The more you know, the easier it is for you. So, you know, assuming that your credit is good and your credit being good are two different things. So the first thing we want to do is we want to address all of that up front. We want to see, what is your credit score? Was there any major credit activities that are impacting you in a derogatory manner that you don't know about? Maybe
Correct.
there's identity fraud, where someone's opening accounts under your name that you weren't aware of. So if you're going to buy, the first thing you should do is begin that process and knowing. And then the other piece of that, Nasir, is that we want to make sure that we have everything we need to close. right? So, do we have the money that we need for the down payment? Do we have the reserves that are needed? Do we have all of the resources available to make this a successful journey? And so, the sooner we start it, the better. Our mortgage, our credit reports are good for 90 days. So you have more than enough time to be able to go out there and find the home you're looking for and have that information and get everything prepared up front.
I do a lot of buyers representation as a real estate agent, and what I found out and noticed is that a lot of buyers, they get really excited, which is a great thing. We want them to be excited. It's an exciting moment, step. But they're very real quick. The very first thing that they do is they go online, start looking for the houses, Zillow and Redfin, and that is fine, no problem. But and go look at the houses and or they call the agent and I want to go look at the houses. That is
Hmm.
well and good, but we must know what is our ability to buy. And I
Yeah.
say it's like everybody when they're going out to eat, they know what they can afford, what kind of lunch or dinner they can afford. Are they
Yeah.
gonna go, do they want to go to the Taco Bell for $10 meal or they would ready to go to downtown to get $100 steak?
Hmm.
Everyone, or should I take my family out and what am I going to able to afford and which restaurant am I going to go? Do I need to go for a buffet or we can go 5 or 6 star hotel or restaurant? And so pretty much same concept that we need to know our affordability before we can, spend our time. Don't you agree, Vinny?
Absolutely, absolutely, and that's a great comparison because you do know where what you can afford when you're going out like that. So
Yeah.
that same mentality needs to be when you're looking for houses because it's a funny story, but I'll have clients that will be very concerned about their budget. And as they tell me that they are looking for a certain payment for what they want to spend and where they're comfortable spending monthly. Then they get online and they start looking at houses, and the houses don't equal the payment that they wanted. So
Yes.
it's very, very good when we're taking that application up front. And a question that I ask everybody is, what does your perfect picture look like? What is the
Mm,
dream home, and how much do you want to spend a month on?
correct.
And that's important because a lot of times those things don't align, and to manage those expectations up front, with getting that approval done early so they can start shopping in the price points that they are qualified for, it goes a long way in managing those expectations and keeping the budget concerns and payment in line together.
Could could
It's important.
could you confirm? I know you touched on it before, but could you confirm that you and your bank can they help clients nationwide or just Texas or residential and commercial? Can you confirm that, please?
Yeah, so we lend nationwide, and we are able to help our residential home buyers. We have opportunities for multifamily, 5 to 8 units, and we are set up to take care of our first time home buyer to our professional investors that are building portfolios and are looking for financing vehicles to acquire more rooftops and at the same time manage that portfolio and pulling cash out so they can grow. Um, we can accommodate all of them. So, and that's something that I personally um, work daily
Right.
is nationwide.
By the way, I really like the T-shirt. Talk the house money sign and talk to Vinny. I like it. I like it. I can see it.
Yeah.
Great, good, good. So let's do this Billboard charts, right? Back in the days and MTV charts. That's my days of growing up, and
Yeah.
so I'm thinking about the MTV charts question. Number one, number two. So as
Yeah.
as as you and I, we know this question number one is, and I'll let you elaborate and give your expert opinion on this. We get this often, this question. When is a good time to buy a house? I'm sure you
Yeah.
get this every day.
So, so I do, and this question, I love it, and I love when I'm asked this because I don't think that most consumers, most buyers understand all of the things available and the benefits available of purchasing a home and all the great things that come with it. I think that from a media perspective, our buyers have been trained to look at rates, right? So 6 is better than 7%, and 5% is better than 6%, right? The lower your rate, the better it is. And so people a lot of times when they see on the news that the rates have gone up, they want to know, hey, where are rates going, and is it a good time to buy? And so my my answer to that question is it's always a great time to buy. And if you look at our current situation right now, we have rates that are starting to come down a little bit, but they've been higher over the past 2 years comparatively to what they had been at 2.75%, 3%. There's a lot of buyers out there that had unbelievable deals on their loans when they purchased their homes with really low interest rates. However, as the rates went up, the time that the homes were on the market started to increase. The demand wasn't there, and Nasir, what that means is that the sellers become more flexible to work with the buyers because they don't want their home left on the market for 100 days. They don't want to. They understand that the longer it's on the market, the more that they're going to have to reduce the price or the less that they're going to take. So right now, we have a bunch of sellers out there that want to sell their homes and they are willing to work with you. And the way that they're willing to work with you gives you such a head start on when it comes to building wealth and getting into that home in a great position with an affordable payment. So my answer always is now is the time to buy. And I've got some numbers to back that up that I wanted to share with them.
Please, go
Right?
ahead.
So if we were looking at saving our money monthly. I want to show you what a great deal it is to purchase a home and how you can win doing this correctly. So, if you were just trying to save money at the end of the month, after you pay your bills and after you've taken care of all your responsibilities, right? You've paid your housing expense, you've paid for your car, your student loans, anything that you might have, and at the end, after all of that's been paid, you have $1,000 left that you can put in an investment account. You can put it into a short-term CD. You have a lot of options what you can do with that $1,000, right? And so at the end of year one, you saved $12,000. At the end of year two, you have 24,000. So that money that you save has to perform perfectly for it to keep growing and get to where the impact of those returns on investment really benefit you. Okay? Because we know that we see the news every day that the stock market is up, the stock market is down, right? So that money has to recover the losses before it can move forward to gains, right? And that's just how it goes. One day it's up, one day it's down. So when you see a return on your investment, that money is really at risk and has to perform well. Now, let's look at the investment of purchasing a home. We're going to buy a $400,000 home, okay? And we are going to have, with our National Down Payment Assistance Program, we're going to give you 5% of that purchase price. We're going to give you $20,000 for you to get into that home to cover your 3.5% down payment and 1.5% of your closing costs, right? So that 20,000 is going to be in your pocket to help you with that down payment. So you're coming out of pocket with your closing costs under that $12,000 that you saved. Probably closer to 6,000 is what it would cost you after you have your down payment assistance and your agent helps negotiate the seller to pay some of those closing costs. So you haven't even spent the first year's 12,000. You're spending about 6,000 and getting into a $400,000 house. Sounds
Very,
pretty good so
very,
far, right?
very good. Very good.
That's a
Sounds,
better return for your money. Now,
yes.
that $400,000 house, you look at it like it's your hedge fund, it's your investment. Because as the property value goes up, you don't earn on the money that you put into it, you earn on the whole value. So if that goes up five, and what's our appreciation in Texas? It used to be 3% a year. Then it went to 40% over 5 years, right? So now, as a conservative, if we said, well, in a good year, we're going up 5% in value, that's $20,000 a year. So let's look at this, right? If we were to save money at after 5 years, we would have 60 grand. But if we were to take just the money that we talked about initially and bought that $400,000 house, we are getting appreciation. The market is giving us money. Our money is still in our bank account, able to earn for us. So there's no lost opportunity cost. And you have the ability to write off all of your mortgage interest. So on that $400,000 purchase, you're going to have in year one, you're going to be able to write off about $24,000 in interest that is coming off your gross income, which is the largest deduction outside of your child tax credit. So you're getting, number one, for a very little amount of money out of pocket, you're getting the opportunity to earn on 400,000. You're getting the tax benefits annually of at least 20 to 23,000 of what you paid in interest that gets deducted from your income. And you have the appreciation that the market is giving you. Because as rates come down, what happens? Values go up. So any of us that buy right now and have the ability to use an assistance program, have the seller help pay for some of the closing costs, we're coming out of pocket with very little money and being put into an opportunity to earn, truly earn. And the great news is, after we've had the appreciation, this can be our first rental. And now we're ready to move on to our next home. So if we make the right choices, these opportunities follow us on the journey of our life. So we're first time home buyers. We're in a great position because we made a great choice. We've got equity in our home. We've got money in the bank that gives us the opportunity now to get our second home. Now we have a rental and two rooftops. And that can all happen within 12 to 36 months. We could be on our second property. So the sooner you start, the better. The more wealth you accumulate, the more of your own money you keep in your pocket. And so I'm very passionate about that, and making sure people understand that If you're going to spend that money, get everything you can out of it. And that means tax benefits, it means growth to your net worth as the property value goes up, and what is happening now as you move on and grow your family. And now your portfolio, before you're at the age of 30, you have two or three properties. And so this is what we're trying to share and let as many people know, my friend, as we can, so that they understand that it's available for them, and the great choices that they make give them more opportunities as they move forward.
Very informative. I want to thank you for you answering this question, the way you highlighted the and painted the picture of the reason of home buying. I hope I the people watch this. We're gonna try to promote it as much as we can. That people listen to this advice because you just drop golden nuggets after golden nuggets, golden nuggets after golden nuggets. Great. Thank you for this answer. So, how people contact you, your contact information, your social media handles?
hmm so you can go to our YouTube channel, Talk to Vinny, on YouTube, and that's our channel that we really try to be a resource for all things real estate and finance. So there's 1 to 3 minute videos there that we're talking about the steps of the home buying process, and little tips to help educate. So as before you start that journey, you know what to expect and are familiar with these terms that we're talking about. So that's it. Talk to Vinny, or you can go to our website, thebiscotto.com. That's BISCOTTO team.com. Or you can reach me, Vinny, directly at 817-714-5090. And like I always say, for all your mortgage needs, talk to Vinny.
Talk to Vinny. All right. So, what kind of credit score a person should have before they come talk to Vinny?
So, you know, like I said earlier, um, knowledge is power. So you have to know, even if you have bad credit, that you have bad credit in order to put a plan in place to start working on it. So ideally, with a 580 credit score, we can get you into a home. The higher your credit score is, the better your rates are, the better your terms are. So some of the things that help your score go up are really easy to do. And so if you're not sure of what your credit score is, still apply. Let's take a look at it, and let's get a plan to raise that score up for you. So there's no red light, do not enter. We invite everyone because we want to make sure that we can give you the information to get your score where you need to be so you can get in a home.
Have you ever lost a friendship for not approving a friend for mortgage? Some mortgage officer get hit with that one too.
I think I've lost hair. I think I've lost hair over, but not friends, because the one thing with us, the way that we do our business is that we really are thorough up front. And if there's an issue, we're going to talk to you about what our concerns are, because we really want to communicate with you whether we can make it happen right now or make it happen in a month from now, right? So there's, for us, is managing those expectations and handling those dreams of home ownership very, very gently. So yeah, for sure.
Thanks. Last two questions I ask all our guests and experts. Um, One question number, favorite food,
Pizza.
pizza. And why is that?
Because my family owned a restaurant when I was a kid, Biscottos in West Pittston. My mom makes the best white pizza and red pizza that you'll ever taste. And my sister is a fantastic cook as well. So we grew up in the kitchen, and so we're Italian, so we're very, very passionate about food for sure.
Fantastic, fantastic. Uh, 1 year, 10 year, 20 year, 50, 100 years from now, if someone watched this anywhere, what one message that Vinny would like to give to humanity, to the other humans, to the world, one message where someone from 100 years from now can listen and watch this and get that value from it.
Sure, sure. That's easy. That's easy. Be kind to one another. Be careful with your loved ones' dreams and inspire. Inspire through example, not by fear. So, a lot of times today, the strong, loud individual sometimes overpowers, and people, because they don't want the confrontation, will follow. When you can inspire, your choice is to inspire and work from the heart. It's much more meaningful, and your legacy will continue because it's the way that I would prefer to live.
This is a bonus question I have to ask you now. For a bonus question, I cannot let you go being a mortgage officer, you being a mortgage officer, and without asking this question. I think I would be unfair to my audience. Okay. So
All right.
this is a bonus question, very important question. Any prediction on interest rates? That's what people want to know.
So they are going to have this eventually trend downward, right? But right now, we have so much information that's back and forth with our inflation numbers and the impact of the tariffs. There's a lot of moving parts that you could find pockets of improvement and then maybe a step backwards. So rates have come down a bit from where they were, but then they started to creep back up. What's going to have to happen is, in order to deal with the affordability issues and the inventory, when we're looking at affordable housing in those price points from 225 to 400,000, you're in order to make that happen, you're going to need a lower rate environment, because more people right now with the medium incomes, they're not able to qualify for certain price points that are available for them. So eventually, if we want to move these housing numbers and the new construction starts, we're going to need to bring down that rate environment. So the that's the target for everybody. Now, what happens in between there is is it's tough to predict, because these are very unique times. But I definitely think that we are going to be working towards a better rate environment at the beginning and the end of this year, towards the beginning of next year. I think we should see some improvements there.
Thank you,
But
Vinny. Hmm.
but my friend, the most important thing, that that question that you asked, it's a great question, because it points out something, that nobody is going to stay in the loan that they purchased their home with, because the rates are going to come down. Nobody is going to stay at 7%, 6.5%. If there's an opportunity where rates go down to 5.25, 5.5, that is significant savings on a monthly basis for our buyers and borrowers. And so keep that in mind when you're purchasing your home now, that you want to be in a loan that is cheap to refinance. So that's why I love the FHA loans, is that if rates continually come down over the next year, year and a half, that we could take advantage of the streamline refinance. And that really is costs you one payment, one mortgage payment, and then you skip the next month's payment. Where if you're in a conventional loan and you're having to refinance, it's going to be a few $1,000s more expensive. So it's very important to make sure that you are in that vehicle, that you could take advantage of what is to come. And Our prediction is that rates are going to start to walk down as we get towards the end of the year in the first quarter of next year. So keep that in mind that if you're using an FHA loan with your down payment assistance, or you're using just that traditional FHA loan, that you're going to be in a great position to lower that rate. So these rates are only temporary, right?
Excellent. Great informative answer. You gave a lot of great overall in our interview session episode. Very valuable information. I also got a lot out of it. Thank you so much for spending time with us, and we would love to have you again one.
Thank you so much, Nazir. I appreciate it. I appreciate you sharing your platform with me to spread this information.
Yes, that's it's all about people and giving them value. Thank you.
Thanks.